Welcome to Fintech Daydreaming, the podcast that dives into the world of banking technologies and the ever-changing landscape of fintech companies. We bring you real-life examples from global and local thought leaders, as well as experts working within the financial industry, and seek out the best stories from the front lines of financial services innovation, where dreams of industry pioneers meet reality. Hosted by Paul Krogdahl and Ville Sontu. This is Fintech Daydreaming.
Hello, everybody, and welcome back to another fantastic episode of Fintech Daydreaming. As always, I'm your host, Paul Krogdahl.
And I am Ville Sontu.
And I'm Janne Salminen, and this is the Nordic Fintech Highlights.
That was a new, interesting way of doing things. I hope it worked out. If it didn't, then we'll put it into the bin of failed attempts of trying to be smart, clever, interesting, and trying something new here on the podcast. But as Janne pointed out, this is Nordic Fintech Highlights, the every other episode where we dive into what is hot, interesting, and news as far as fintech and banking technology in the Nordics is concerned. As we are now sitting here in November, we will be taking a dive into the newsletter that was sent out by Janne and his team for the month of October. Checking there. Yeah, October, November. Yes, October. So we will be doing the news highlights of October, which also happened to be the birthday month for some of the hosts of this podcast. We will leave it for you to try and figure that out. There's three of us, and I'm saying more than one, so one is left out. Maybe leave it in the comments underneath. Which one do you think did not have a birthday in October? But that aside, Janne, any interesting news highlights from the month?
Yes, indeed. There were many things. And probably the biggest and the most exciting thing in the fintech in the Nordics in October was, wait a second. AI investments. So there were like 7 funding rounds, and all of them were related to AI. So AI-driven compliance platform, Formalize. Then there was a Noom AI CFO tool, a multi-agent system, even a buyback like a kiosk where people can put their old phones in, and then they get the kiosk automatically by AI evaluates the phone and gives you money back in exchange directly through Swish. And then also Ville Solution raised funding, and they are setting up a new AI development center in Kuala Lumpur. And not directly related to fintech, but even Nokia raised 1 billion in funding from the leather jacket guy. So AI is truly running the world. And then, of course, other topics, partnership-wise, we had some open banking and BaaS news. On the banking side, Alisa Bank partnered with Nordea to do factoring for their entrepreneur customers, and then also Alisa Bank sold their consumer loan portfolio to Nordiska, so they're clearly focusing more on that business banking and BaaS side, and then there was one three-way merger in Denmark between the banks.
And for those of our listeners who aren't watching us on one of the videos these days are both on YouTube and on Spotify. But if you're sitting in the car and just listening or having a nice walk in the countryside, Janne just put on a leather jacket. He has just stepped back in history to when it was hip and trendy to wear black leather jackets. And I'm not sure whether it suits you or not, Janne, but you can keep it on for the rest of this episode. It's interesting though to see that stablecoin was not the hot potato of investments during the month. I mean, Ville, were you expecting to see a lot of stablecoin investments?
I was about to say that we might just be able to get through an episode without mentioning stablecoins, but you messed it up already, so here we are. Anyway, yeah, so that was my thought exactly as well. A lot of AI things, very exciting things, and also personally very happy about the Nokia news, of course, because Nokia being a very traditional Finnish company, and it's always nice to see them doing well. So again, very happy about the NVIDIA investment, even though it was not directly fintech related. But yeah, again, hopefully we don't have to talk more about stablecoins during this episode, though.
We might have some sneak bits that come in at some point in time closely related to stablecoins. But let's see where this whole episode ends up going and what rabbit holes we can find ourselves in this time. But back to the AI discussion, there is a looming assumption by certain individuals that AI is a huge big bubble about to explode, considering looking at the investments that's going into Nvidia, etc. Is this a fear, do you think, for the large number of investments that's going on at the moment, Janne?
Yeah, I think with like everyone has to be AI at some level. I think that's kind of obvious thing that AI will pretty much take over everything there is, and obviously people want to highlight it more. Even if you do core banking or you do embedded finance, at least you want to highlight that, hey, this is somehow AI related. So even from these cases, what we see, obviously there is some real AI stuff going on, but is AI actually in the core, or should it be even in the core? We are doing, solving problems after all. So yeah, depends how you want to see it.
I feel a little bit like we're having déjà vu here. Ville, do you remember back to the days when blockchain was the answer to everything and every technology, every solution, and the answer was blockchain? It's almost feeling the same again, isn't it?
Yeah, it is. It is. I mean, and it's funny when working in different parts of different organizations, it seems like the senior leadership is very interested in making sure that AI is involved in everything, but the people who are kind of lower in the operational roles find it a little bit challenging to match these expectations to use AI for everything, what that the leadership is demanding. So I think we are slightly on the same track as we are with stablecoins, which is that where are the use cases? What is the actual, at the end of the day, value that you will get out of this? It is much more progressed, of course, with AI because you can actually do real things with it that you cannot do with stablecoins. But again, there's a lot of hot air in this discussion, and there is always a risk that these benefits have been a little bit overstated, perhaps. But one thing is for sure, it's quite interesting to follow, and I use AI a lot in my daily work. So there's a there.
I have to admit, I also use AI quite a lot. I find it very helpful as an assistant, but I definitely would never pass everything over to AI. I mean, it's good there to help me with research. It's good there to help me to sometimes get answers very quickly, but you still need to keep your own opinions, your own perspectives, and make your own decisions at the end of the day, even if you're using AI to help you along that journey. But Janne, we are digressing. We cannot do an episode without a joke. And as you are our honored, esteemed guest for these episodes, do you have a joke?
Yes, of course. And in the honor of the Father's Day just passed us, so I have a proper dad joke. So where does dads store their dad jokes?
I have no idea, and I'm a dad, so I should probably know.
In a database.
No. Okay. Happy Father's Day, everyone.
Well, at least it wasn't a blockchain, right? So that's good. Fantastic. Thank you. Okay. And with that having been said, as always, we will do a deep dive into a couple of news articles that we found interesting in the newsletter, which we hope you all do subscribe to. If you're not subscribed to the newsletter that comes from Helsinki Fintech Farm, then we will put a link at the bottom, or you just Google Helsinki Fintech Farm and you'll find the newsletter. You can subscribe to it. And it's not just for us fintech geeks sitting in the Nordics. Janne and his team do pick up an awful lot of interesting things that are relevant globally. So subscribe, go and listen, or listen to us, go and read their newsletter, even if we do highlight some of the articles that come out of the newsletter. And with that, this time, Janne, I'm going to start with you. What was the news article that caught your attention that you thought was most interesting from last month?
So yeah, Klarna was a lot in the news. Again, well, they are a big company internationally, so they tend to launch stuff every month. But now they actually announced that in UK and EU market, they're introducing a 4-tier membership program. So the idea is that customers can subscribe to our membership, and then they can get some travel cashback, lifestyle, and other benefits to according to the plan. And the plans are Core Plus, Premium, and Max. And well, yeah, it's like a perk system which is kind of like a known from some payment cards, which has been around, of course, for a long time. And then we know neobanks like Revolut are running these kind of systems. So now Klarna is also entering the game, and it's interesting to see if I see this again, kind of one step closer to the banking kind of customer model and service model, which they're kind of taking again from being just a payment provider or a BNPL provider. So they are also just noticed that they are even mentioning in their own press release that they are a digital bank and a payment provider. So clearly a step towards there. And then yeah, the other news were that Klarna, also known for a lot of AI stuff, they're also now starting to utilize Google Cloud AI stack at its full level, but also they filed the 8 billion case in the Swedish court for Google not being really fair in their display ads in the Google search results. So it's kind of interesting to buy from someone and also sue them at the same time.
Yeah, I think this maybe a new partnership model where you first partner up and then you sue them immediately. So for $8 billion, euros. So yeah, interesting news indeed. And the Klarna tiered model now, so as they call it, I think that's a welcome change. At least personally, I found it a little bit difficult to see how Klarna differentiates with, of course, they have the BNPL core, but being a real option for a digital bank, I think their retail offering has not been, to me at least, very interesting. Now, this is a way to increase the attractiveness of this way to pay with Klarna, because you're able to attach all sorts of fun things, including the cashback feature, which of course is the most interesting bit for many of us. So yeah, another page from the Revolut's playbook, clearly, like you mentioned. Revolut has their different tiers as well, Ultra being the highest. And it's going to be interesting to see how these kind of add up and how they're compared to Revolut, for example, in terms of benefits and cost for these tiers. Because I believe part of the news, they did not disclose how much these different tiers cost for the customers, but that they're just introducing them. So yeah, interesting to see. Looking forward to seeing if I need to get another card now from Klarna.
I have to admit, the whole partnering and fighting at the same time, I've seen some other US vendors going through the same notions, so maybe it's becoming an everyday occurrence. But onto the tiered level, I'm in mixed views here. I'm actually starting to get bored with subscriptions. We're drowning in subscriptions. Everything is becoming subscription based. I've actually started canceling my subscriptions because it just sucks all the money out of your account. Before you know it, they've increased the price, they've lowered the value you get. It's an easy way of getting a constant revenue stream. But I think what tends to happen is that as they increase the cost of the subscriptions, they don't improve the quality and outcomes of what they are delivering to you. So it just becomes let's suck as much out of our consumers as possible, which is sad. So I I understand why they're doing this, and I understand that we're all moving to a subscription-based model where eventually, you've subscribed to the air you're breathing, and if you don't pay, you're going to end up having air with advertisement. But as long as they deliver value on an ongoing basis, then it will be good. But sorry, I ended up with a bee in my bonnet for subscription. It used to be buy now, pay later. Now it's subscription-based services. But hey, there we go. We need to have someone on the podcast that whinges and moans. I'm a old cranky man. I'm allowed to sometimes.
Yeah. But did you notice that both of your gripes are from the same company, Klarna? So
that's just coincidence, absolute coincidence. But yes, they have come out on top. So what can I say? I mean, I am a user of Klarna. I've used Pay by Klarna many times, very often because, I can't find my card and the vendor isn't, giving you the option of pay by Apple or something else. So the only option that's available there to you if you can't find your card fast enough is Pay by Klarna. And I've taken it, but I've never actually used the buy now, pay later to the extent where you're breaking up the payment. You just end up, it's more like an invoice-based solution, right?
Yeah,
So-
I mean, I've also talked about this many times before, but I have used it, and I only use it when there's when the merchant eats the cost, the interest cost on the BNPL payment. So it's basically free financing in those campaign scenarios, but it's quite rare to actually have that. But back on the tiered structure, what I'm actually missing here is that I would like to see more of these models where you actually have to somehow earn your right to get a higher tier. So kind of combining something a little bit from like the airline loyalty programs where it's kind of some sort of a prestige to hold certain types of card or certain type of subscription tier. Amex famously has had this for a long time. So if you're having like a black Amex, then you know that you are someone important. Diners Club also used to have it a long time ago, black Diners Club cards and things like this. Now all you have to do is pay couple of 20 euros, whatever extra per month, and you can get whatever tier you want. So it feels too easy to obtain these things. So maybe somebody needs to bring back this gamification of these tiers a little bit.
There is another view on this as well. I'm actually at the moment advising a fintech in the Nordics. Obviously, I cannot mention the name of the company, but they are bringing out a very interesting solution. And they were also looking at this capability of saying we want to have a tiered model, subscription-based. And my perspective to them was, isn't it better to make all your capabilities available at a almost transaction-based cost? Rather than saying to someone, we're going to charge you a monthly fee for the ability to potentially use something, make it available to everybody and just say, if you use it, there's a flat fee. If you then realize that you're using it an awful lot, we can maybe give you a monthly subscription to that one capability, rather than this whole notion of, being forced to pay for a subscription to multiple capabilities when what you only really want is one. I mean, Revolut, I think we've had this discussion in the past, Ville. I don't need Tinder. I never used Tinder, probably never will use Tinder. So the idea of paying for a subscription at Revolut that gives me Tinder, I'd much rather have that removed and pay a little bit less. Give me the other things that would be interesting that I want to pay for. It's a different way of looking upon it. You can end up in a subscription-based model again as well, but it's very specific on each capability rather than a bucket of things.
Yeah, glad you mentioned Revolut. I was about to bring it up, but I think the Revolut, you pay for the subscription where you get 10 other subscription. That's a bargain, I think. Like I don't even know how the business model works because it's fairly cheap offer for the consumer, even if you would just use one of the services. But yeah, like you mentioned, this entire subscription economy world. So then I see once in a while there pop up startups also on the fintech side, like, hey, what if you could just easily pay for one news article instead of always just getting the subscription to every newspaper and every paid TV channel and every kind of sport package. So what if you could just watch and read things individually, like just when you actually need?
which is actually another element of the subscription-based model. There's can we call them the leading news provider in America, who used to do newspapers. So I'm trying very hard not to name them here because I don't think it's polite to throw names around. But I'm sure, Ville, you know who we're talking about because we are frequent listeners to some of their podcasts. But in the old days, you'd buy their newspaper, you'd pay for their newspaper, and you could share that newspaper with everybody in your family. These days, they're doing a family subscription, but really what you're doing is you're paying more for each of your family members. Yes, they say it's a family subscription, you can share it, but you're paying more. So this whole notion of I bought a newspaper and I share it with my partner disappears the minute you get into a subscription-based model as well.
Indeed.
But now we've gone down a rabbit hole. So let's move back out again, and maybe we'll do a podcast episode specifically on the subscription economy. Maybe find an interesting book that someone has written and get the author on to talk about it from a fintech and banking perspective. Before we go down that rabbit hole even more, Ville, what was the news article that you picked out of the Nordic Fintech highlights for the month of October?
Well, we did kind of, at least I did, decided in the beginning of this episode that we will not talk about stablecoins, but this is kind of close maybe, because I want to talk about, of course, the digital euro. It's been discussed so many times in this podcast already, but there's been a news update now, and I feel it's maybe time to refresh a little bit on what has been said, what is being planned, and what is really happening in the digital euro world. And the background for this timing, for this news update, is that the ECB has reached another 2-year milestone in the digital euro program. So they finished the current phase, 2-year phase of the development of the digital euro, and they made an announcement that they will indeed continue now the development of the digital euro. And specifically, they said that they have chosen technology vendors to deliver different parts of the digital euro solution, and they are greenlighting the development and deployment of these components from these technology vendors, and that will start now immediately following the governing council's decision to approve this step. All good in the ECB world. However, there's the element in this discussion which is the political part of this whole setup around the digital euro, and that relates to the fact that the European Parliament it needs to approve the legal proposal on their table and make it into a law proposal, which will then start the so-called trilogue discussions between the European Parliament, Commission, and the Council. After which it will be written into national law, and then we have the legal certainty of the digital euro happening. Now, before we reach this state in this program, there's going to be a lot of things need to happen. So the European Parliament now has moved into a schedule where they're looking to vote the digital euro about the digital euro in May 26. So that will be roughly 7 months from now, where we record. And they're going to take this time to discuss what exactly should go in and what should be kept out of the digital euro. So they're kind of scoping it while the ECB is developing it at the same time. So a couple of things there. The ECB is running an implementation risk. So they might be implementing something that the political discussion changes in the parliament, and then they would have to update it later. Second is that according to the European Parliament preparation work, a report that was put into the preparation work from the Parliament actually had a very drastic change in scope for the digital euro, namely focusing mostly on the offline part of the digital euro payments platform, and basically downscoping the online part almost entirely. If that would happen, it would be a very radical change for the scope. And again, the ECB is running a risk that this might happen coming out of the political discussion. So a lot of interesting things, a lot of uncertainty, of course, as usual. And we'll see how that works out. Now, to add insult to injury, of course, in this situation is that the ECB also wants to run a pilot for the digital euro have it up and running mid-27. given these uncertainties about the scope and definition of the digital euro, it's going to be interesting to see how this pilot will be run and scoped, and whether or not it's even possible to do it given these timelines. But yeah, a lot of open questions, a lot of uncertainty, but it's all fun and games in the world of the digital euro as usual.
Yeah, so lots of fun and games. Janne, what's your view on this update?
Yeah, actually, I think the interesting part is the actual decision making, because my feeling has been that someone has decided that it will happen, and everyone has started to do the measures to get eventually things done, but kind of the thing that maybe it's a democracy where we should perhaps vote for it or something has been kind of been missed on the way. But yeah, it's interesting to see now how the decision making already goes, even though I think sometimes there's a lot of European Union decisions which normal people aren't even aware of, just happens somewhere in the Brussels, but I'm pretty sure that there will be a lot of debate and fight and conspiracy theories and all kind of fun stuff along the way while we even get there.
I think there's already been an awful lot of conspiracy theories and misinformation and a lot of misunderstanding with all of this. And I think that's going to continue. And to a certain degree, I think the biggest issue we've got when we talk about the digital euro is the same as the discussions we have generally around stable coins and your famous question, Ville, of tell me why. And I think most people are still struggling with trying to understand why do we have the digital euro even on the discussion and what is going to be the purpose of it. I, to a certain degree, understand partially why we're having this discussion, and I sort of sit on the fence but lean a little bit more towards the positive than the negative of this. So it'll be interesting to see how this progresses. I also think to a certain degree, like you alluded to, Janne, there is an assumption being made across the whole of Europe that this is going to happen. It's not a question of if it's going to happen. It's more a question of when is it going to happen. Potentially that might change anyway. Let's see. But one of the things that I also found interesting, Ville, is like you said, the focus is suddenly now very much on the offline. Do you think that's because they want to try and push this more back into the realm of the cash world, of physical fiat cash, and make it closer to that? Or do you think there's another reason for it?
So the report that I was referring to was written by a member of the European Parliament, Navarrete, who has been the rapporteur, so the person who has been running the preparation process for the Parliament for the discussion about the digital euro. And in his report, he says that the offline part is interesting, or should be the focus, because it is the closest resemblance to cash or a real digital cash rather than the online part. He also pointed out that the online part of the digital euro is actually quite close or even identical to things that we already have in the market. Therefore, he said that it's actually a little bit redundant, whereas the offline part is just something that doesn't exist today, not in the scale that they're planning with the digital euro. So he's saying that the private sector should take the online part, the ECB should focus on the offline part, and the wholesale CBDC part for the kind of B2B or institutional settlement in more efficient way. So again, leaving the private sector the chance to fill the gap in the middle, basically making the wallet and P2P payment infrastructure interoperable across the Eurozone. So that's the proposal on the table. To the point, by the way, the ECB also made, to the point of why, or tell me why, is that the ECB has been they've been sharpening up their communication when it comes to this why question. And it's still the same arguments. It's basically that this is a public sector or public money instead of private money. So again, in the online world, in the ECB's view, there should be a version of public money also available. So that's number one. Number two, of course, is the European payment sovereignty and strategic autonomy. So they want to be less dependent on non-European actors when it comes to critical payment infrastructure. And then third one is the interoperability. So again, there is no European widespread interoperability so that I could send money to anybody in the Eurozone without knowing their IBAN number. And we don't also have acceptance infrastructure that will be interoperable beyond the American platforms that everybody uses these days. So these three key points has been it has been stressed a lot by the ECB even in this latest communication. So anyway, it's a very interesting landscape. We could also talk about the cost element, but maybe we are overdue on this topic already.
Yeah, I suppose from my perspective, it is that nuance between public and private money. The fact that it's a central bank liability, even if it is on the online side rather than the offline side, it's still a central bank liability, and everything that comes with it being a central bank liability that differentiates it from other alternatives. Lots of discussions around stable coin, apart from the fact that stable coin on blockchains, you end up paying a whole lot of ether or whatever it is, just to manage a transaction. But with that, I'm actually going to jump into to more worlds of crypto and Bitcoin. And I say that with a bad taste in my mouth, me and Bitcoin. But I picked up a very interesting news article, which was around Nordea. And I want to make sure that I read this correctly, because I don't want to be misquoted by this fantastically large financial institution here in the Nordics. But according to Nordea, they have closely been monitoring trends in the cryptocurrency market, but maintained a cautious approach due to the unregulated nature of crypto assets. Surprise, surprise. We all know what that's all about. But as the market has matured, Nordea has decided to allow customers to trade in an externally manufactured crypto-linked product on its platforms. The new product is manufactured by CoinShares International Limited and will be available on Nordea's platforms in December 2025. Now, lots of interesting things here. First of all, Nordea starting to look into the crypto world, where in the past Nordea has been very much on the fence on this. And secondly, I'm finding this manufactured crypto very interesting. So, I'm going to be a little bit quiet here, although I think this is interesting. More gambling, more crypto in the world. Not sure this is a great idea, but Janne, what's your view on this?
Actually, when this came out, I just started to think kind of the question that where's the difference between if you directly have crypto trading on your platform, or then you have a Bitcoin ETF, and then basically if you have access to foreign stocks, there are probably stocks which are kind of directly related to Bitcoin. So then where's the kind of line of providing Bitcoin investments or crypto investments kind of directly or through some, other instrument or fund or whatever. But yeah, I think obviously the kind of the pressure and or not necessarily pressure, but generally it's just becoming a more mainstream thing, and Nordea wants to be somehow involved. But sort of surprising, but again, probably there already is some ways to invest in cryptos. Otherwise, there are so many funds and instruments and everything on the market anyway.
A certain element of Me Too added into this. But another thing that they've said in their announcement, which I caught on to, is they're allowing their customers to trade, but Nordea does not offer advice in any way on this. So they're still keeping it at an arm's length, saying if you're interested in trading in some way connected to Bitcoin, we were going to give you that capability at an arm's length. We're not going to give you any financial advice on it, and you do it at your own risk. And I'm assuming that you will need to sign something that says you take full responsibility, accountability, and any outcomes that might come from any trades you do using this new product. Ville, I'm going to turn to you, sitting in the big, blue, wonderful Nordea. What's your view on all of this?
Yeah, so just as a reminder, again, full disclosure, I do work in my day job at Nordea. So again, whatever is said here are my personal opinions and not reflective of my employer's views or points of view in any shape or form. And with that disclosure out of the way, let's dig into this a little bit. So first of all, Janne, to your question, the reason why these kind of legal envelopes like ETFs and ETPs exist and why they are chosen by financial institutions is because it provides a legal structure and a compliance structure that is much easier to integrate into the processes of the bank and the platforms of the bank. So again, there's a wide portfolio of different ETPs and ETFs available even today. Just adding one more is much more simpler than providing direct access, for example, into crypto exchanges, which is again is a whole other can of worms that I would hesitate to move into if I would be making those decisions. The fact of the matter, however, is that of course it's cheaper if you go and access or buy these crypto assets by yourselves directly into your own wallet, and of course you will pay less fees when it comes to this. But the simple reason why I think Nordea has moved into this space is because there's been a lot of questions from customers asking, why can't I invest in crypto? I don't want to start a wallet. I don't want to understand all the complexities of doing my own custody and all of these things. And I don't really even trust these crypto asset service providers or exchanges with my financial information, let alone my money. So this trust element comes into play, and then the customers say basically, but I understand that it's a volatile market and I understand that I could lose all my money in this, but I can see the price movement going up and down all the time, and I want a piece of that, basically. So there are certain customer segments that are willing to pay extra in form of those fees in order to just have a safe way to expose themselves to this kind of a volatile speculative investment vehicle like the crypto just is. So I understand that appeal, and by far Nordea is not the first one. There's a lot of financial institutions and banks that have offered similar products for a very long time. So again, nothing new under the sun from that perspective. But I think it's still a fair question, though. I mean, considering that banks allow their customers to do gambling, but they don't provide gambling services in form of ETP or gambling derivatives on their markets, and this is equivalent to gambling, in my opinion. So again, is it a good idea? I don't know. Volatile markets, volatile speculative investment vehicles are interesting because they are so volatile. So that's why this appeal is maybe understandable. But is it good? I doubt it.
We partially had a similar discussion on a very recent episode, Ville, talking around stable coins, where we said, I think we were talking about the joint venture between a number of European banks, where we were saying, well, maybe this is just a case of the banks have run out of products to define and sell, so therefore they have to find something new, and this is just something else they can throw into their portfolio. I'm not saying Nordea, or maybe I am saying Nordea is doing the same thing, but you need to, I suppose, innovate and come out with new products that you can sell to your customers to enable you to actually grow the bottom line and grow your revenue. So therefore, anything is fair game, whether it is to a certain degree gambling or not. If it's a product or a mechanism you can monetize on, then any private institution is going to do that to a certain degree, as long as they stay within the regulatory framework that's controlling them to make sure that they have their license and maintain their license.
Yeah, and ultimately it is safer if you really insist on investing in this market, then this is probably the safest way you can do that. Because there's an argument to be made there that we can do this safer. I think the comparison that I was using, that if you are addicted to drugs, it's better you get the drugs from a pharmacy rather than from the street. But again, the problem is the drugs, not the distribution.
Absolutely. And with that, we round off yet another deep dive into the news from the newsletter that we have found interesting for the month of October. We are getting to the end of another episode of Nordic Fintech Highlights. But before we go, I believe, Janne, you've got a large event coming up soon that you'd like to promote.
Yeah, absolutely. So December 4th, Nordic Banking Forum, that's the main day. We bring together all the bankers from the Nordic countries and Baltics and elsewhere. So if you haven't signed up yet, you should definitely come if you work in banking or related to banking. And then also we have on the 3rd, the day before, we have a lot of other activities. We have the breakfast seminar with Samlink. We have roundtable discussions with Vaselius. We have cocktails, and we have afternoon workshops and so on. So yeah, nordicbankingforum.com. And the best thing, of course, is that you can meet Ville and Paul in person.
Absolutely. As is always the case, Ville and I will be there flying the flag of FinTech Daydreaming with our media passes, recording interviews and having fantastic chats with people that are there in attendance. So if you are there, if you've got an interesting piece of information you want to share with our listeners, then come and find us. We will be somewhere in the premises at some pop-up studio space, and we will be recording and discussing. Until then, though, we will have another episode coming out in 2 weeks' time. If you want to, please be kind to us and hit the like button, leave us a comment, hit the subscribe button. And as we always say, please share this with just one of your friends, one of your colleagues, someone else that you think might appreciate the ramblings from these three Nordic fintech nerds that get together and discuss what we think has been interesting and fun in the market. Until next time, this has been FinTech Daydreaming.
This is FinTech Daydreaming.